Right, good evening, everybody. Welcome to the Audit Committee of Lichfield District Council on the 13th of October 2025. As we've got some new faces here, and welcome to you, I'm just going to do the usual round robin round the table of who's who. So I'm Councillor Joe Powell.
I'm Councillor Sue Woodward, Leader of the Opposition.
Laura Hinsley, External Audit Partner.
I'm John Smith, Councillor from Johns.
I'm Max Armstrong, I'm Internal Audit Manager from BDO.
I'm Gurpreet Dooley, I'm the partner and your new Head of Audit, Head of Internal Audit from BDO.
I'm Faye Orton and I'm with BDO as well, Internal Audit.
I'm Councillor Paul Taylor.
Anthony Thomas, Director of Finance, Regulation and Enforcement, the Council Section 151 Officer.
Councillor Claire Booker for Whittington and Streatham.
Councillor Jamie Checkland for Lemonsley.
Councillor Mark Warfield for Bowley Park.
Councillor Tom Marshall, Councillor for Armitage with Handsacre.
Godley, Governance Officer.
Lovely, thank you all very much. Apologies for absence.
Chair, we haven't received any apologies.
Fair enough. Declarations of interest. Those either. In that case, minutes of the previous meeting. All right? Yes, Councillor Chapman.
Just within the minutes, he makes reference to cybersecurity and that Kerry was going to ask the ICT manager in relation to insurance. Did anything get circulated or did you hear anything back?
Not yet. Anthony?
All I can say is that there are discussions ongoing with the insurer about the cybersecurity. I think they've asked for some information from the council to make an assessment of the level of risk and price up the premiums. I have seen those emails going backwards and forwards.
I wanted to follow up.
The next one that I haven't seen in the papers, and my apologies if I missed it somewhere amidst the number of pages. The BRS risk score of R3 was to be looked at and reviewed and taken back to in light of the whole site rather than not just the Kennings part. Is there any updates on?
I'll go back to John Smith on that.
On a more positive note, the high risk of the Greenway, is that still a high risk? Probably not now. Is that being amended down on the basis
so
of
next time we come before the committee with a risk update, I would imagine the BRS one and the green one to be updated to reflect latest information.
Yep.
Yeah.
My question.
Anybody else? Or did you want another one?
No, otherwise I'll
Anybody else? No. Oh, sorry, Paul. Yeah.
Yeah, just on, if you would, Chair, going back to item 81, which goes back to the minutes of the previous meeting. I did ask whether we'd had any feedback on the VAT issue for LWMTS, and there was an assurance from the last meeting that would come, and I don't know whether you've seen anything, Chair, because I haven't.
Anthony?
Again, I've seen correspondence going between various parties to try and get an answer for you on that. So it is in progress.
Thank you for that one. Thank you. In that case, statement of accounts, which will be over to Anthony.
So I can appreciate for members, this is a very long technical document. I don't have a lot of flexibility on the content, but I thought I'd do a short presentation on the key points. You can either then ask some questions of me, or we can go straight to Laura, and Laura can go through the external auditor's report, and we can take questions after that. What I will say at this point, there will be some further minor adjustments that will be made to the accounts. And one of the recommendations we're seeking from the committee is a delegation to the chair and the vice chair to be able to make those amendments. If there are any more fundamental amendments, they'll have to come back to the audit committee. We're also seeking an approval for the letter of representation and for the chair to sign the accounts once the audit's complete. So if I just go through So just a little bit on the information. So the statement of accounts in local government are prepared in line with the Code of Practice Local Authority Accounting for 24-25. The council audit regulations are the statute that sits behind it, and they require a local authority to certify its account for the 30th of June each year, and normally publish an audited set by the 30th of September each year. However, these regulations have been replaced. So for this particular year, there is a statutory backstop in place. So members are probably aware there's been a lot of issues with sign off of accounts. A number of councils have got multiple years outstanding that haven't been signed off. The government is trying to get to a position where they're all signed off to a form. So either they're signed off properly with an audit statement, or they have some form of disclaimer that goes with them that say they can be assured to a certain level, but not in entirety. So the backstop for this particular year is the 27th of February 2026. So just how did we do? So we certified a set of accounts on the 30th of June. Our target is the 30th of September. I'm hoping tonight we can get to a position where at least we can agree the accounts, and whether we need to go with this statutory backstop to a large extent is going to depend on when we receive the assurance from the pension fund auditors, KPMG. We've ostensibly finished our set of accounts, and Assets have finished their audit. We are just waiting for this information from KPMG. We're not alone. Every council that's a member of the pension fund, including the fire authority, are waiting for that assurance at this point in time. Just to get a little bit more detail. So, as I said before, this is a long document, over 100 pages. First time, and this is added to the complexity, we've had to prepare a set of group accounts. So in addition to the council's accounts, which do take up the bulk of the document, there are a further 8 pages to do with the group accounts. That's because we own LWMTS and we've got a 50% share in Darwin Prospects LLP. That's incurred an additional audit fee for 24-25, £20,000. So the group accounts, as I've just said, consolidate our financial interest in those 2 subsidiaries. Because we own 100% of LWMTS and therefore we have got total control over it, we have to consolidate on the basis of what's known as line by line. So we take the council's income, we add to it LWMTS's income, and then remove any transactions that are between the 2 parties. So we only show the information once in the group set of accounts. We do the same for expenditure, we do the same for assets, we do the same for liabilities. So you'll see when I go on to the statements a little bit on, you'll see a column or a line which says intergroup transactions. That's where we're removing transactions between the various parts of the group. Because we only own 50% of Darwin Prospects, we don't have to do that. We only have to show our share of any profit or loss for the year and how that impacts on the council's investment. This is, I just wanted to put this in because this just sets it in context for us. We've had to deal with 4 sets of external auditors this year. We only used to have to deal with a single set of external auditors. So we've dealt with Assets on behalf of the council. We've dealt with LWMTS's auditors. We dealt with Darwin Prospects auditors, who coincidentally are also Assets. And we're dealing at the moment with Tamworth Borough Council's auditors because the shared waste fleet, part of the asset and the liability, appear on Tamworth's balance sheet, and therefore they've got to be assured that the way we've accounted for it is also correctly. Lovely fun, that is. So just the statement of accounts, these are the key points to it. So there are sections to it. The only part of this document that we've really got any flexibility over is what's known as the narrative report. It's the second item down. That's where we, as an organisation or management, can actually explain to people how we believe the financial, non-financial performance, the risk, etc., is impacted on local residents, businesses and taxpayers. The rest of the document, including the 5 items in black, which are primary statements, and the group accounts, are laid down in the Code of Practice. The independent auditors report at the end is a format that is agreed nationally, and it's what assets provide to us. So whilst I would love to reduce the length and complexity of this document, unfortunately I'm not able to because of the code. So just on the comprehensive income and expenditure statement, so this is our equivalent of a profit and loss account. It's prepared on the basis of accounting standards and requirements. So the same way that a private organisation will prepare its accounts, we prepare this particular statement. So again, most of this is laid down in the code of practice. So you'll see the prior year and the current years. The only element we've got real flexibility on this, so you can see where we've used active communities, confident communities, etc. Those are not what's known as reporting segments. We can use the reporting segments that are familiar within the council, and we've used the council strategic plan 2050 strategic priorities. You will see for 23-24 under the year a little bracketed restated. That's been restated not because there are errors in the numbers, but because last year we prepared the reporting statements on the old strategic plan. So we've restated that, so you've got a genuine comparability between the spend last financial year in the new strategic priorities and this year. Active communities, that's predominantly spend on things like leisure centres, what TAS does in terms of active Lichfield, things like that. Confident communities is predominantly things like disabled facilities grants, homelessness, housing. Green communities is where the joint waste service sits. Prosperous communities is where things like car parks sit. And then internal services are things like members, elections, internal services, pensions sit there.
So just in relation to the active communities, the difference between last year and this year is about 800,000, 700,000 pounds. And in conflict communities, it's close to £1 million. Now, is that because we're doing more work in that area, or what's happening to increase that?
Yeah, it can be a combination of things. So it can be like there's a change of approach. So, for instance, we insourced leisure centres, I think it was last year. So you would have seen a big change in the spend and the income last year. It can be because of things like capital expenditure. So, for instance, in confident communities, housing benefits makes up the predominant share of that number there. But it can be capital expenditure, so on disabled facilities grants, etc. So if we spent more on disabled facilities grants and confident communities, that would show as part of the reason for the variance. So it will include changes in the way the council operates, but it will also include changes in things like capital expenditure, capital income, capital grants, things like that, which tend to be they don't tend to be, they're what's known as lumpy in spend, so they can create variances. They're not like every year you'll have the same salaries for an activity. So those are the sort of things that will tend to create the differences from year to year. So just on things like other operating expenditure, that would be where parish precepts are included. Finance and investment income expenditure would be where treasury management investment is included, where we include any debt repayments, and then taxation and non-specific grant income is where council tax, business rates, other grants that we receive would be accounted for. So if we were preparing a set of commercial accounts, we would have made a profit for the year of about £5.7 million. Last year would have been 6.4 million. In addition, to give people an idea of how much the net worth of the council, the balance sheet, has grown, we also show how much non-current assets have increased. So for this particular year, just shy of £3 million they've gone up. Pension liability has reduced by 1.9 million. So in total, those elements of the balance sheet have increased just shy of £5 million. So at the very bottom, where you see the total comprehensive income expenditure, our balance sheet has grown by 10.5 million 24-25, and 9.5 million the previous year. And I'll go on to that in a little bit more detail when we get to the balance sheet. Now, the other part of this equation is we also have to prepare financial information and performance in the way we do in money matters. Now, this is where it starts to get really complicated, and I'm trying to keep it simple here, but at the very top of this line, you can see the financial performance from the previous statement I've just shown you. However, under law, we're not allowed to account for some things that the accounting requirements require us to. So if I just go through this, the very bottom line is the number you'll see in our Money Matters reports. So we moved from a £5.7 million surplus or profit to a £53,000 loss deficit. Why do we do that? So in the commercial sector, they wouldn't necessarily transfer any of their surplus to earmarked reserves. They would just leave it in the loss account. We do. So we drew down 162,000 from earmarked reserves in 24-25, and we transferred 2.3 million to earmarked reserves. Then we come to the statutory entries. So although in the comprehensive income and expenditure statement we account for things like depreciation, like you would do in the commercial sector, we're not allowed to do that under law. So we have to remove that and we replace it with things like statutory debt repayment entries, any capital accounting entries. We're not allowed to show the full cost of employer pensions. So if we included the full cost of employer pensions, that reduces the surplus. And again, we have to show statutory estimates for council tax and business rates. If we include those, again, it adjusts that surplus or deficit. So when you take account of those items in the blue lines, it changes from a surplus or a profit, if you want to use that term, to a deficit for the year, purely because on one basis we're doing it on an accounting standards basis, the other we're doing it by the law under statute. So just on reserves, because I think it's quite useful to have a look at this as well. So this is our what's known as a movement in reserve statement. So we've got 4 areas of usable reserves. So we've got general reserves, earmarked reserves, capital receipts, so that's the income we get from sale of assets, and capital grants and contributions. In total, they've increased by £105,000 from 23-24 to 24-25, so almost neutral. The total unusable reserves, and these are the accounting ones to do with pensions, asset valuations, asset funding, etc., they've gone up by 10.4 million. So if you added those two figures together, that would be the 10.5 million increase in net worth that I showed on the comprehensive income and expenditure statement. Most councils have fluctuations in the unusable reserves, and they will tend to be quite large fluctuations from year to year, principally because of the way the pensions are valued by the actuary. On the balance sheet then, so again, what's changed on the balance sheet? So from year to year, you can see our long-term assets have increased by 14.3 million. That's quite a sizable increase, that is. But if you actually drill down and think about that, you know, we're building a brand new leisure centre that is partly constructed, so we've got the construction costs for that. We've acquired a brand new waste fleet, so the value of those vehicles that are ours, not the Tamworth Share hours, are shown in there. We've invested just over 3 million in the LLP. We bought other small items of plant equipment. So when you think about it on the ground, you can see why our assets have increased quite significantly in value. We've got a decrease in our working capital. That's things like your short-term assets, liabilities, relatively small in the scheme of things. An increase in liabilities, that is in part due to the new waste fleet and the finance lease that we've got in place. And then the two bottom figures again are those movement in reserves. So your two big differences from year to year are long-term assets have increased and the unusable reserves have increased to offset that. Again, cash flow statement. So again, you'll see this in the private sector. It's how money is moving between your various bank accounts during the year. So During the year, our balance has increased from 25 million to nearly 33 million, which is about a £7 million increase. You can see the sources of income, so asset sales, council tax business rates, largely capital grants contributions, so like the things like Better Care Fund for Disabled Facilities grants, Section 31 grants for business rates, etc. And then we've actually reduced our short-term investments. So we've put more into our cash and cash equivalents, and we've got less in investments. And then our other operating activities, our cash incomes exceeded our cash expenditure. Now from that, we've paid for assets and we've paid debt repayments. So I'm just going to go quickly now to the group comprehensive expenditure statement. So again, this shows expenditure and income for the council, LWMTS and Darwin Prospects. LWMTS made a profit of 163,000 in 24-25, and Darwin Prospects made a loss of 222,000, and our share of that is 111,000 as a 50% owner. The reason for that loss is that Darwin Prospects isn't trading yet. It isn't. The building hasn't been let, income's not coming in, so expenditure's being incurred in advance of that. So things like probably having accountants, auditors themselves, incurring probably some form of professional advice, administration costs and things like that. So I would imagine that would continue until the facility's finished and it starts to generate income. But that's, sorry.
Darwin Prospects, is that just the cinema building, or are there other properties up there as well?
No, it's just the cinema
Just the
building.
cinema.
But that's what I was going to say there, is that's the reason my recommendation to council was approved, was we take a budget neutral approach to the cinema until we've got much more detail on the income from that facility and our share of it. So just on the group comprehensive income and expenditure statement, the numbers are the same. What I've done there is shown you in red the elements that relate to LWMTS and Darwin Prospects, and you can see LWMTS has got the expenditure and the income shown because it's accounted for on a line-by-line basis, but Darwin Prospects has only got the single entry of the 50% loss at the bottom. Movement in reserves, exactly the same. You can see the council's element, LWMTS reserves, so they made the £163,000 profit this year. You add that to last year's reserves, you get the 180,000. You've got the £111,000 loss in reserves for Darwin Prospects. Group balance sheet, again, you could see the council, LWMTS line by line, and Darwin Prospects just that share of the loss and the reduction in the investment. The reason that we've had to prepare LWMTS group accounts this year is you can see current assets and current liabilities are 1.9 million and 1.7 million. That's material in the sense of the council's accounts. So our materiality level is about 1.3, 1.4ish, something in that. Those numbers are now material. So we need to show those in the accounts so that a reader of the accounts will have an idea of what is going on with LWMTS and how that impacts on the council's accounts. And then again, on the cash flow statement, we're only including LWMTS here because line by line, Darwin Prospects, we're not including the cash flow for that. But again, LWMTS's cash flow, cash and cash equivalents increased by 27,000 between the 2 years. And then last slide, you'll be pleased to know just what the next steps are. So you're reviewing the accounts at this meeting along with the audit findings report, which Laura will go through. The belief is that assets are indicating they'll provide a clean or unmodified opinion. Laura will go through that a little bit more in a minute. We're still waiting for the pension fund assurance. Hopefully that will be here imminently, but I think we hear that quite regularly. We have got through to the 27th of February, but I hope we don't get that far. If it's delayed or we require further adjustments, that might mean we need to have a further audit committee. I'm touching wood, we don't need to do that. But My expectation is we will complete the accounts prior to that update on the 27th of February. That was all I was going to say. Happy to take any questions.
Pretty simple, isn't it? Thank you very much for that. It was very comprehensive and quite understandable, which is good. Any questions, anybody? Before we move on?
Anthony, stop sharing your screen. It'll be live streamed.
Do that, Rihanna.
Is it plugged into the HDMI? It's fine.
Okay. Yeah. Yes.
Some of the things that I noted down, I saw something that said all the garage site working capital of 2.75 billion. My understanding was that it was sold for more than that. What does that mean? My other one was we allocated a lot of SIL money last year, which hasn't gone anywhere. Presumably that's an account gaining interest. What's happening with that interest? Or what's happening with the SIL as well, in fact. Development prospects you've covered. Those are my two things.
Okay, so just on the first one, we included last year, or we accounted for that piece of land outside there as what's known as an asset held for sale. So we were looking to sell it and it was accounted for as an asset held for sale. It's valued on the basis of the land as is. It's not valued on the basis of planning permission in the accounts. So the 2.751 million is our external valuer's assessment of what that land was worth at that point in time.
Right, okay.
So the value that it will be sold for will be with planning permission, as I understand it. So it will be a higher value.
Yep. Okay, I understand that one.
So on the SIL money, so on the balance sheet, there is an account called Capital Grants Unapplied. Any SIL money we've received that hasn't been spent sits in that account until such time as it's spent, basically. And you are right, it sits in there earning interest until it is spent.
And does the interest come back into the council or just go back into the SIL money?
It goes to the council.
The longer it sits there, the more the council gets and the less the public gets.
Yes.
Okay.
Yes.
Just following on from that, I'm hoping it's not going off piece too far, but it is about money and how we spend it. Where do we find things that this is what this money should be spent on and this is what this one should be spent on? For example, SIL, because you said that in my head, where do we find this is what SIL money should be spent on? And how do we keep an eye on that's actually what it is being spent on? Does that make sense? And SIL's a great example because of where it comes from and how it's generated.
Yes, so it won't be in this document. It isn't hidden in there anywhere. I would expect that's in something like the infrastructure funding statement that the policy team has. So there's an element of statute around SIL. So this is what you can spend it on. We develop our own policy or approach, which I understand would be in the infrastructure funding statement. So from memory, there are things like strategic infrastructure, local infrastructure, things like that. And then Cabinet from memory set their priorities around where they want to invest that SIL for a particular year. So it might be health, it might be well-being, it might be GP expansion, things like that. So that's where, from memory, thing is codified.
I don't know if we can note that somewhere in a minute. I would like to explore where we find that, because this is all about money, and as long as it's balanced, it's great. But it'd be nice to know that it is being spent on the right things. But whereas all the numbers and the great, and I, you know, I've never understood accounts as much as when I watch you do it, and it's great.
Yes.
And I really appreciate it. And I can see the work that goes in. I can see the balancing. It'd just be nice sometimes to understand that next level down. So SIL is one maybe, but
No, that's absolutely fine. It's what we're here for. So it's,
Yeah.
So, Councillor Checkman, Taylor, you indicated.
I've got 2 or 3 points if I may. I'll go through them. The first one's semantics and fairly minor, but it isn't. Well, I say it's fairly minor. It is important. The recommendations 2.1. The first 3 are that we note these reports, and as was drilled into us last year in our first training session, we are more proactive than simply noting these. This isn't a set of reports for somebody else that we just see. So that should be, we receive this report, something along those lines. This is the end destination for the report. The purpose of the report is that we look through it and discuss it. So yeah, I would suggest, can we beef that language up in future?
We'll have a look at that and come back with something for that. Yes, certainly.
Next point, 3.14 in the opening report, the unusable reserves. You've got 5 bullet points in there. Been around finance for 20-30 years, and there's some terminology in there that I'm not sure I understand in this context. So item 1, a decrease in the negative pension reserve following the actuary's valuation. That's straight above my head. An increase in the capital adjustment. Yeah, the word salad, 4 lines of word salad after that, which I get has specific meaning, but yeah, beyond me. And the final one, increase asset values assessment by, was that the BRS, or is that?
So on that particular one, it could be any non-current assets. So all of our, well, say all of our, 90% of our assets are valued each year by the external valuer. If they increase in value, so the top half of the balance sheet increases, you will see the revaluation reserve at the bottom increase to keep the balance sheet in balance.
So how does that impact our unusable reserve?
Because the revaluation reserve is one of those unusable reserves.
Right.
So if your assets increase at the top,
you have to have an unusable reserve that matches the value of the asset. Okay, all right, that's fair enough. Okay, yeah. So, but the other two, yeah, the bullet point 1 and 4.
So again, with the pension, so at the top half of the balance sheet, we have a long-term liability or obligation, which is the amount we owe. If that fluctuates when they actually change it, on the bottom half of the balance sheet, there is another unusable reserve, which is a pension reserve, which moves in sync with that. So it's almost identical to the non-current assets. To keep the balance sheet in balance, the unusable reserve moves in sync with it.
So is that suggests so that the value of the pension fund has increased, or has it decreased, and therefore we need to offset that with?
So I think from memory, and I'll have to check this, I think the pension fund has, our obligation has reduced. So that means we need a lower pension reserve on the other side of the balance sheet.
Okay. I struggle to understand why we therefore need an increased unused reserve. It's the logic doesn't.
Well, I can get you a little bit more detail if that helps.
Yeah, no, that would be great. And then the 5.9 million, obviously.
Is that the capital grants unapplied? Was it?
This reserves absorbs the timing difference arising from different arrangements for accounting for the consumption of non-current. Yeah.
Isn't it? So this is one of the quirks of local government accounting, in that when we fund an asset, so let's say we build a leisure centre, and we build it and it costs £1 million, let's just say, and we fund that through capital receipts. We'll show the £1 million on the top half of the balance sheet, so that's the million of it being purchased. What happens then is you would move £1 million from your capital receipts reserve into the capital adjustment account, basically saying that capital receipt has been spent and is no longer available.
Right.
Now, you wouldn't do that in the commercial sector, it would be different, but unfortunately this is one of the statutory overrides that we have to then follow.
Okay, yeah. If you give me a second, there was another one somewhere. Yeah, so the government statement, page 26. For the purpose of the government statement, provides details of how the council has responded to any issues identified in last year's governance statement. So I went through those. Within the time I had available, I couldn't pull out any bits that said how we'd addressed responding to issues.
Clarify where we are now. You
Um,
the statement of account.
Yeah, so page 26 of the report, page 43 of the document. I realise that's slightly specific.
Yeah,
I can't remember whether we had any issues to address last year.
Yeah, I can't either. I'll have to go back and find out. I do know the annual came to the committee in early April. So I'll have to go back and find out for you on that one. I can circulate that.
I think that's me done.
Okay, thank you very much indeed. Councillor Checkland and then
Sure.
Councillor Thomas.
About Sill again, sorry. There was only 1.4 available last year. There was nothing available the year before. 1.1 of that is now sitting in an account for to assist the NHS build the doctor's surgery in Burntwood, which hasn't even got a planning application in yet, unless I'm told different. How long is it going to sit there until we're disbanded? Then
I don't know the answer to that question, unfortunately. I can try and find out for you. I think.
Good luck.
I think you're right though in the point you made that it can't sit there indefinitely. It wouldn't. You wouldn't do that if we were a council that was going to be here in perpetuity. You'd want to review it at some point and say, is it going to move forward or not? I think the point you're probably making though is with local reorganisation, really don't want it sitting there beyond a
it
reasonable
needs to
time.
be spent sooner rather than later. And when is the next Sill out?
There's one I think coming out soon from memory.
Soon.
Yes, I had a feeling. So, I mean, you're testing my memory on some of this stuff, but I can find out about.
But your memory's better than mine, so it's fair.
Councillor Marshall.
Thank you, Chairman. Anthony, it's page 91 or 74, whichever you choose to take, but it's 74 and 91. Just depreciation. I'm just wondering how this works, because under depreciation, we've got the following useful lives and depreciation rates, etc. Buildings 2 to 87 years, vehicles and plant 1 to 25, infrastructure's 50 years. So for buildings, we've got a very wide variance, which covers all sort, a multitude of sins, I'm sure. Infrastructure's 50 years. I'm just wondering why it is that we have just that one certain period of 50 years and there isn't any variance there.
From memory, I think we've got a range of different buildings. The value it provides us. I think we've only got a single asset in that infrastructure. I think it's a cycle lane. A year life assigned to it. So we don't provide a range in that situation.
Is that because no one cycles on it?
They do, because I've used it.
Okay, I'll let because Anthony, my other question was what is covered by the infrastructure, and you've just answered that very succinctly. Thank you.
Before we go on, Sue.
Yeah, can I say that it's getting very confusing because we've moved away from the report into the statement of accounts, and I thought that Laura was going to present the statement of accounts before
yes.
so I've got numerous questions and we're sort of jumping about. So it would be better, if I may say, to do it in a logical order, and the logical order would be for Laura to come in next.
Unless anything was desperate from that case, Laura.
Thank you, Chair. And just if I may address the AGS point that was raised, there is a section on page 40 which does address the governance improvement actions from the prior year. Again, from memory, I recall that there were no significant governance issues in the prior year, but it'd just be worth looking at that narrative to see whether you are satisfied with that. I'll now just jump through the report. I won't go through it in detail because Anthony's made my job quite straightforward for you all in explaining some of how the accounts work, which are quite technical, and some of the audit adjustments that we have identified are technical in nature. So I may default to Anthony as well to explain. But as Anthony said, yes, we are approaching the end of our audit. I expect that by tomorrow, probably, we will have finished all of our external audit work, notwithstanding the pension assurances that we are waiting from KPMG. We were assured that we would receive them by the 30th of September. Here we are in October, and we again have been told that we should receive them by the end of the week. The intention will be for us to look to sign our audit opinion, assuming the accounts are approved today, as soon as possible after receiving those assurances. So hopefully within the next week. In terms of findings, we haven't identified any significant issues relating to what we call significant risk areas. We did go through those in the plan, and they largely relate to areas where there is estimation uncertainty. As Anthony has said, the valuation of land and buildings and the valuation of the pension liability being the two most complex estimates within the accounts. The other significant risk for us is a risk that pertains to all entities, whether they're public sector or commercial, and that is the risk that management do have the ability to override the accounts. We are happy that we haven't identified anything that would indicate that. So in terms of findings from our significant risk areas, there's nothing to bring to the committee's attention. We did identify 2 adjustments that have been made to the accounts, and both of those relate to how the group accounts were presented. As Anthony said, it's the first year of preparing group accounts, and that is quite a complex process. The council had initially accounted for Darwin prospects on the line-by-line method that Anthony introduced that was correct to use for LWMTS. That's now been restated into the equity method, which is the correct basis, but that has led to a material adjustment on the group balance sheet. There is also one unadjusted finding that the committee should note and be satisfied with management's rationale for not adjusting in the financial statements. So we did identify a piece of land that the council does have the right to use. IFRS 16 is a new accounting standard this year, which means where the council has the right to use an asset, it should be accounted for on the balance sheet, and a corresponding lease liability should be recorded. The impact of that finding is about 447,000, which is not material to the financial statements, and management have elected to not change the accounts for that, but we'll take that on board in future periods. The other significant area of our work is in relation to the value for money assessment, and we are pleased to report we haven't identified any significant weaknesses in relation to the council's arrangements to achieve value for money. So to perform that work, we do speak with quite a range of people from within the council, as well as members, and we look at quite a number of documents and processes that are followed by the council. The 3 key areas being financial sustainability, governance, how the council uses resources to deliver services. Within that, we have included the scope of LWMTS, and we know that governance of the subsidiary was a key focus. So we have done a piece of work there to assure ourselves that we're happy with the arrangements, and we know that the council did undertake quite a piece of work and has had a report. I'm not sure, Anthony, if that report has come to audit committee. Okay. We will provide a full commentary on our value for money assessment, but that will be coming to the next committee in November. And I hope that we're not in November also signing the audit opinion. I think the order of events will be, we will look to sign the audit opinion as soon as possible, and then we will bring our commentary to the November committee. But I'm happy to take any questions on the report.
Sue, did you want to?
No.
The Checkland.
Ready, so I might as well ask the questions. Was pleased to hear about the misstatement, which that explained one of my questions, but it has the other question, which is the piece of land that we didn't account for that we could do something with, but we're not going to.
So the land was accounted for. It is included as your asset register, so or the lease register. So it's not as though it was missing completely. It just hadn't been accounted for at the correct value under the new accounting standard. And we did have correspondence with the valuer to get an up-to-date value of that piece of land at the 31st of March. And that's where there's a difference of the 447,000.
Okay. And the only other thing was you mentioned LWMTS, and there's a piece of work going on around that. Within your report, it appeared that you had slow responses. Is that the piece of work that you're referring to?
No, the piece of work I was referring to is I can't remember, Anthony, who undertook the report around the governance structure for LWMTS.
Yeah, there was a company that did a governance review of the board and the structure around the board. From memory, I can't remember the name of the company, but it recommended no political representation on LWMTS's board and the establishment of a shareholder advisory group on the council side with cross-party representation. That was, I think, the outcome of that review.
So that was the piece of work I was referring to. In terms of the quality metric and access to the finance team, you can see on our quality indicators, 4 of them are green and 2 of them are amber that you've referred to. We did experience delays in getting information out of LWMTS, but I do appreciate it is the first year that they will have experienced having their own set of auditors and ourselves asking questions. And there's also been a change in the way that payroll has been provided for the council, and that has caused some challenges in terms of being able to access historic information.
Councillor Wood.
Yeah, just on a point of information, the delegated decision has gone through now about the setting up of the advisory board, and I'm waiting as a group leader to be asked for my nominee. So that's in process now, and it's a question for tomorrow night, really, rather than for tonight.
Yes.
There's a comment saying the quality of information and evidence provided was adequate, which seems to be sort of damning with praise. Was that because of the having to wait for LWMTS?
I think that's a factor within that statement, and I think it's probably fair to say that it was mixed. We have historically had very good information from the council, and the majority of the information we received continued to be good quality. We recognise group accounts. It is the first year, and that has provided some challenges, and the added complexity of LWMTS on top. I think we've taken a balanced view around, I guess, adequate is what we've named it. We'd probably normally only say has been sufficient. So yeah.
Anybody else? No?
Can I ask just a particular question about the detail? It's on page 91 of the and it's one of the notes to accounts on other land and buildings breakdown. And I'm grateful that the misstatement has been aired, because that comes up a couple of times during the report. But on that chart on page 91, it refers to an arts facility.
Are you 91 of our report or 91 of the?
91 is now Laura's introduced the
All right.
statement of accounts on page 91 of that. There isn't a page 91 of the report. Page 91 of the documents. Page 74 of the statement of accounts.
I've got, are we on statement of accounts or audit findings?
74, 91 of the pack.
Page 91 of the pack. It's just a detail, and perhaps Anthony can answer that question, really. It just jumped out to me, arts facility. What arts facility?
Gary.
Oh, right, okay. So that asset still lies within our accounts.
Seems so, yes.
13.4 million, basically.
You own it, so we are the freeholders.
Yeah. Okay, thanks.
And that valuation is the cost it would take to rebuild it in current prices. That's the valuation.
Thanks.
Thank you very much. Anybody else?
Anthony, really, I'm not joking. I mean, I look at these pages and I see all the numbers and I do my best to understand what's going on. But when he explains what the different, we could do with the talk before we try to read the papers, to be honest. then we don't have a chance of really catching it now. And the fact the auditors are here and have so little to moan about is a real gap, really.
Good. There won't be too many councils in that position. Yes, Councillor Taylor.
Yeah, sorry, are we dealing with the audit findings report? Yes. Okay, so you mentioned LWMTS governance review. Was there any recommendations around non-exec directors in that review?
I believe there was. I believe there was a recommendation to appoint non-executive directors to the board.
Okay. And at the end, we have the 3 outstanding internal control recommendations. So we have the one that's been a few years with you personally being able to enter journals, and it mentions a single journal that you had to do in the last year, because I know the last time we spoke is you had the ability to, but you not to. Is that was there a specific pressing reason around that? Can we...
From memory, we needed to get something done quickly and there wasn't anybody else around to either enter or approve it.
Okay. And it mentions additional controls where this has occurred. What are those controls once you've done a journal entry?
So from this one, I think it was a collection fund, which is council tax business rates. So from memory, I don't get involved in any of the journal entries during the financial year. That's done by somebody else. All of the entries come from SIPFA models, so you can check that the outcomes from the entries equal what the SIPFA model says. From memory, they're the controls we were talking about.
Okay. Okay. And then the lack of a formalised process for the removal of users from the finance system, is that something that's being addressed? Is there
I think
resolution in?
I think so. The council uses single sign-on. If you log into your computer here, you can then get into another system without. Yeah. The argument we're trying to make here is that as soon as somebody leaves the council, their single sign-on is revoked, and therefore they cannot get into the system because they've not got a single sign-on. What the auditors have said is yes, but you need to then end them in the system as well. Okay. With most people as well, unless they're a finance team person, they can't do anything in there anyway. They can only view things, they can only enter a requisite, but they can't approve it. So there are other controls around that would stop anything happening that we didn't want to happen. So that's the nature of our response to that point.
So in practice, whilst they're still technically on the system, they can't access the system because their login is not accessible to them.
That's correct. Yeah.
Sorry. Yes. I've got one query, but I'm not sure if you can answer it, because I know that your numbers, it might be one we might have to ask Simon. On page 92 of your report, 109 of the pack, I noticed the number of employees who are paid more than 50,000 remuneration has gone up from last year from 13 to this year to 19. It seems like quite a big jump on the number of people who are being paid over £50,000. And where would we be able to find out why that's such a big jump of 6 members more this year, 6 officers more this year getting paid £50,000? That's quite a lot.
I'll have to find out for you on that. I mean, there would be
ones and twos up and down. Yeah. You kind of see that you've gone from 9 to 8 and 2 to 3, etc. But it's quite a significant jump.
I mean, you would get a natural drift, as you say, because of pay coming into it. But
that's almost like a third more.
There's numbers included with the LWMTS.
No,
that's just for the council.
Councillor Marshall.
Chairman, I'm just thinking that the explanation might be, I'm not saying it is, but it could be the fact that there was a certain cohort who were just hovering below £50,000 a year in that particular pay band. And then we saw a small increase of maybe 2.5%, which took them above that. That would be my logical thinking there, but I'm not sure whether that is the correct explanation. But it might be if there was a particular pay band just below 50,000 and then a small increase took them above it.
That would make sense, you're right, but last year we had nobody in the threshold of 65 to 75, and this year we've got 3. So 2.5%. I don't know. I'm not the I'm not the numbers person.
No.
We can find.
Thank you very much.
That.
Thanks.
Very much. Anything else? Yes, thank you, Anthony. Work programme, I think, is the next thing.
I think we have an agreement.
Do we need a vote?
Yeah, on the recommendations about the delegation to the chair and the vice chair.
Yeah. What's that, sorry?
So there's 3 noted recommendations.
Yeah.
And then there's the committee needs to approve a delegation to the chair and the vice chair.
Yeah, so that there'll need to be a vote, yes.
Yeah. Can I propose an amendment along the lines that Councillor Taylor referred to, that it isn't just that we note the contents of the report, we note and ask questions on the contents of the report. And I think that just clarifies, but we said this before a number of times, we don't just take it as read, we do interrogate the reports and ask relevant questions.
Yeah, I think that's a very good idea. I'd be happy with that. Just emphasises, as you rightly say, what we do.
We've tried, sorry, I apologise for that. We've tried to use the word reviews in subsequent listed in this one. So, yeah.
Is that amended now from noted to reviewed?
Yeah. Yeah, that's fine, because that's that's a more proactive way rather than just sort of receiving it and not interrogating the information. So, yeah.
So with that amendment, all those in favour? Very much. Any opposed? Any abstentions? In that case, thank you very much.
I was going to say in the work programme, there aren't any updates. It's just I amended the item on meeting with managers about outstanding internal audit recommendations, just to include what the committee agreed last meeting, which was that the chair and vice chair would receive routine reports and then see if it will go to committee.
Lovely. Can I add one to that? I believe we have an audit training session coming up on the 16th. That's
Thursday.
Mr. Members, please, if you can attend, please attend. Councillor Taylor.
Yeah, I just having a quick look through. We've all hopefully recently completed an audit of our skills audit. I don't see in this work programme a discussion of the outcome of it. And I think that could probably do with happening sooner rather than later once we've got it.
It certainly could, and I believe it went to Rebecca and has now been passed to yourself, right? Yes. So yes, you're absolutely right. It has all been and will be very shortly with us. Yeah.
Can we potentially add that to the November?
Yeah, no problem.
Meeting then. You Chair.
Can I ask, Chair, for information, what is the training for next week? Because a number of
This week, it's Thursday.
You remember
I've got it down in my diary. But
do you know the Rob Winter that came?
Yeah, yes.
So he's going to do a refresh session. So obviously there's a number of new members on the committee, so we thought it would be useful to get him back to do another session.
Is it necessary for those of us who've been around for quite a while? Perhaps if we want to refresh it, yes, but
I suppose, I mean, it's up to you as members. I doubt it will be significantly different to the previous session you did.
I think that answers your question.
decision. Yeah, okay, thank you.
No problem.
My apologies have been noted for that, because there's no way I can afford 3 nights this week away from planning lessons for schools.
No problem at all. Fully appreciate that.
Chairman, I'm offering a semi-apology because I've got another meeting to go to at 7:30 over at Stafford. So I can only attend for probably the first hour training session. It's a semi-apology, Chairman.
Won't be much longer than that anyway.
Oh, right, okay. Thank you.
I think it's an important point though that Claire makes. I mean, members of this committee have just received a report that's 200 plus pages long. We've got full council tomorrow, a training session on Thursday. That is a lot to expect this committee to take in over a short period. And one of the difficulties I always found with overview and scrutiny committee, they tend to coincide at the same point in the cycle. We just need to pace it a little bit better so that we're not presented with huge reports on consecutive evenings. It's a plea.
I would concur with you on Harley, yes.
Members. And then can you take that?
Yes, so next time maybe better to have the audit training not the same week as the committee.
Probably
This is an emergency meeting though, wasn't it? So the training was in.
Actually, I think the audit training was scheduled for a different day. I think we did it originally and it changed. So it might just be one of those where it's worked out quite unfortunate.
Yes.
Chair, if I could, these meetings are usually quite short, so, and some of the ones like overview and security were quite long, so I'd be more than happy to do it on the same night. I just can't afford 2 nights. So if we can maybe think about putting it together, I don't mind extending one evening to incorporate both. That might be useful. But I actually had a second point on the works programme, and it's based on some of the conversation we've had tonight just on the SIL, is reviewing of specific accounts such as SIL, something that could come through the audit committee, because it's having a look at how that money is generated and how it's being spent. And it's, you know, it's about the money and it's about value for money and all the things we've touched on. Is it something that we could have a specific audit of at some point?
Anthony, what do you think?
See there's any reason why you can't have a look at the governance, the risk management and the approach to the allocation. I can take that back. We can put it onto the work programme at some point, take that back to the team that deal with that.
I would be interested in it.
Could you progress that a little bit then, Anthony, please? And we'll make sure it goes in the programme.
Very much.
Share a suggestion. I've been looking at Councillor Strachan because I think a lot of these sort of interrogation of that sort of next layer down, if you like, happens at ONS when we look at the MTFS and so on. And I just wonder, and I think it's been suggested before, it might be useful at some point during the budget making process or at some point during the financial year to have a joint meeting of ONS and audit, so that, you know, both sides are being looked at from an audit perspective, from, if you like, the operational perspective.
You read
Sure, it's on the
say that one.
I'm inclined to agree too, and certainly there was a time when I chaired overview and scrutiny when part of my role was that I had a seat on the audit committee out of right. There was the crossover that is no longer there. It's probably something we can look at.
Let Steve know.
Yeah.
He's going to love you for that.
Yeah, no, an excellent idea, and yes, we'll carry forward with that. Councillor Strachan. Thank you, Chair. Pleasure, thank you. Anything else, anybody? In that case, 1902, I declare this meeting complete and finished. Thank you so much.